Welcome back to the show, everybody. Ellie, also welcome back to the show. No stranger to real estate insights, and we appreciate your contribution to the show. It's helpful to have a multifamily perspective as we talk through some of the market dynamics that are happening right now. I wanted to ask you, what from an advantage standpoint, what kind of advantages do institutional investors like Blue Lake Capital have in the market as you're analyzing and doing deals that are out there?
So when it comes to institutional investors, we're actually not talking about Blue Lake. We're talking about, large banks. We're talking about pension funds and the like. When they are looking at deals, obviously the big advantage that they have is surety of closing, because as a seller, if there's a private group, they may or may not close the deal, and something may happen. They may not get the equity, or something can change between signing the contract and actually executing and closing on the deal. But when it comes to, or the lender's not gonna extend, not gonna approve the loan. But when it comes to institutional investors, essentially surety of closing is very high, meaning that they're good for their money, that a lender, or and probably a couple of them, are going to approve the loan, that they have the ability to bring the capital that they need and that they will close. The flip side of it is that sometimes you can get things, as a seller, from private groups that you cannot from institutions. For instance, in a good old good old days, 2 years, 3 years ago, 5, 7 years ago, many buyers, in order to be competitive, they offered a non-refundable deposit, and they
Yeah.
waived a lot of contingencies. Meaning if they don't, there was no financing contingencies many times. So if, as a buyer, you take the risk that you may not find a lender that would be able to give you what you need in order to close the deal. And in that case, you lose your deposit. It's non-refundable. When it comes to institutions, they have a lot of mandates. They have certain standards that in certain regulations and bylaws that they cannot essentially pass, and so they cannot, they have to obey by. And so, for instance, they do not have non-refundable deposits. Now one may say, well, it's fine because surety of closing is high and they're probably going to close. Yes, but what if they find out something during due diligence that is going to make them think twice and regret and essentially pull back and not buy the asset? When it comes to non-refundable deposit, many times, even if you find something during due diligence, you can't really take that money back.
Yep. And from a competition standpoint, do you consider yourself an institutional investor? You're saying that those are hedge funds and pension funds and things like that. Does Blue Lake Capital consider yourself institutional?
No, we're not. We're actually a private equity group. So institutional investors, they are many time public companies, pension funds, and that's one type of investors. And you have, on the other side, you have private equity, and in between you have family offices. So
Yeah.
when it comes to institutional investors, we're actually not institutional. We're not an institution. We're doing large deals, and we just recently we closed the 11th largest multifamily deal in the US and the fifth
Wow.
largest in the Midwest in 2023. But we're not institutions. Many institutions are buying, deals above $100 million, but it doesn't make us an institution.
Gotcha. Do you sell to pension funds, or would a pension fund invest in your company instead of taking down the deal themselves?
That's a good question. So when I buy assets, I actually buy assets that are in locations that are very attractive to institutions, and that they have the vintage that usually institutions are interested in, which is 90s vintage and up. And that's part of the exit strategy. Now, I actually personally haven't sold to an institution. I had some of them actually, they bid on one of the assets that we've exited years ago, but I decided to go with a different group for various reasons I'm not going to get into. But yes, we are definitely, we can sell and we can buy from institutions. Um, in, and again, if they cannot offer a non-refundable deposit, then I may or may not prefer to work with a private equity group that has more flexibility.
Right. From from a market perspective, geographically, I guess, around the country, how do big players that are coming into markets and looking at these big apartment complex? You mentioned $100 million deal a minute ago. How does competition affect pricing, or does it?
So are you asking essentially when you're looking at large deals, how the competition is impacting the process?
Yeah, or even the price. I mean, does it everybody has an Excel spreadsheet, you've got a model, a formula to where the deal is going to make sense for you, based
Yeah.
on the economics. Do you find that more players in the market, more big players competing with that, will cause people to compress the economics and stretch on a deal, or does everybody kind of have the same commercial view of that, to where this is the price, this is what we're going to pay, and then you just compete with whoever the best personality is, I guess, in the mix. Does that make sense?
Yeah, years ago, I would say 2 years ago, and 2, 3, 5 years ago, the competition was fierce, regardless whether if it was $100 million deal or 50 or $20 million deal. But I would say that the smaller the deal was, the wider was the gap between and the spread between the different offers, because you had groups that were not that sophisticated that essentially were willing to bid a lot more, whether they their fees were lower than others, whether they did not know how to underwrite, or whether they were too optimistic and were very aggressive in their underwriting and assumptions, and that made them bid very high. When it comes to larger deals, 50, 80, 100 million and above, it really depends on the timing. So on the timing,
Mm.
5 years ago, we were competing against, and 3 years ago we were competing against, um we could bid with 10, 15 other groups. So it may not be against, I was once on a $20 million deal. I bid and there were 35 other or 34 other groups. These
Mm.
numbers are insane.
Yeah.
So obviously you have fewer groups that can buy $100 million deals, but there's still competition.
Right.
The interesting thing and what we're noticing today is that most buyers are arriving at the same number,
Right.
more or less. So you don't have a $5 million gap between your offer and the winning bid. It could be a quarter million, could be 100,000, maybe $500,000, maybe more, maybe less, but the delta is kind of shrinking because everyone is more conservative. The debt, everyone is kind of going back to fixed rate, work with agencies, not working for the most part with bridge lenders, and so
Yeah.
you pretty much get to the same number. And then the question is, do the seller like you? Do they, how they evaluate your surety of closing and what other terms that you're willing to offer that can be attractive?
So it really does boil down to, I guess, the team that you bring in front of that seller to really sell yourself as a company, as a good partner in that acquisition process, to really put yourself over the finish line.
Yeah, it's definitely part of it. It's definitely part of it. We're affiliated with a family office, and of course, we make sure that the seller understands that the broker understands that. So that helps with obviously surety of closing. But we also have flexibility that many larger groups and institutions don't have.
Makes sense.
And when institutions stopped investing 18 months ago, only a handful of private equity groups were able to actually compete. So we were walking and bidding on Blackstone assets, and no other institutions that I know were part of the bidding process. But it was us and maybe four other private equity groups. And so it was nice to be to bid on deals without competing with institutions, but they are coming back. So they're actively looking to deploy money. And I think that probably towards Q3 of this year, we're going to see more deals happening with large institutions.
Interesting. We've got a couple of minutes left, Ellie, or actually
Yeah.
one, but final question. Of all the deals that you look at, what percentage would be off market and on market?
That's
Off
a very
market,
good question.
yeah.
Yeah, that's a very good question to my acquisitions team. I would say that maybe 20% are off market. The rest are still going through brokers. So even
Yeah.
if it's not fully marketed with a full offering memorandum blasted all over the internet, if even some of or most of the off market deals at the size that we're looking at, they still go through the brokers. So the sellers are still going to go to brokers and tell them, call your top 5 groups or 10 groups, offer it to them. There's no official marketing materials. There's no official, sometimes there isn't even an official bid-in process. But as you go to the smaller assets, 5, 10, 20 million, then you may be able to get, off-market deals directly from the seller because usually you're dealing with less sophisticated or legacy sellers. Sometimes they're old and they retire and their kids don't want to deal with the real estate, or the owner died and the heirs are essentially selling the assets. But mainly, even if it's off market, it usually still goes through the brokers.
Yeah. So it's harder to find those direct to seller acquisition targets anymore.
Not at 100 million. These
Yeah.
guys are never, going to just have someone look at their asset and make a bid and sell it to them without having a broker involved. So not at that level,
Makes sense.
unfortunately.
Makes sense. Ellie, thank you again for the time. We'll be right back after a quick break, everybody.
Absolutely, Andrew. Thank you for having me.